since my last video, the Nasdaq is up nearly 28% from lows and staying back around all-time highs. Now, if you didn't watch my last video for whatever reason and somehow missed all the upside, in this video I'll show you how to be prepared in the future if you ever see your pullback and how you can take advantage of it. Let's get straight into it. So like I talked about in my last video, the biggest thing is you have to zoom out and look at everything that's happened in the past, 20, 30 years of the stock market. We've always recovered and we've always bounced back up to all-time highs relatively quickly. Now in this instance with tariffs and everything that happened on Liberation Day, it was about like a 2 to 3 week drop and you bounced up pretty rapidly. So that's what I was talking about in my last video, why you have to be patient and don't get scared and sell your positions. If you sold all of your stocks at the bottom, around $390, $400 on QQQ, you missed out on about 20% of upside, and now you're looking back in the past like I should have bought more, I should have done this, I should have done that. But that's why I strongly emphasized in my last video, just being patient, holding it out and waiting for a better opportunity. And even a buying opportunity, you guys bought some more stocks down there when the whole market was down 30 to 40%. Big names like Nvidia were down at $80, back up 140. Tesla dropped down to 230, back to 340. Names like Microsoft back at all-time highs, sitting around 40 at a $3.5 trillion market cap. So there was lots of big buying opportunities if you guys bought the dip during Liberation Day. Everything happened in April, and now we're sitting back at all-time highs, and all you had to do was just zoom out, look at previous instances when the market crashed and when the market dropped rapidly, and notice how every single time when you came out those holes, the markets recovered stronger and pretty quickly. Now, like I said, 2022 was an off example of an actual bear market that lasted 8 to 10 months. Now, if you just go back out and zoom out to the last 20 years since the start of the millennium, there's always going to be a million different reasons to sell your stocks, panic out the stock market, hold. If you listen to every single thing that me, Alex, are saying about the stock market and why I should sell, but if you guys are patient, don't panic, and let the market do what it has to do, which is eventually go up over time, which is designed to do, go up eventually. You guys made out with a great return, and you guys are staying back at all-time highs in your portfolio if you guys just didn't panic, follow the plan, and watch my last video. And building on my last point, if you guys have been around the stock market since at least COVID, you guys will know that typically when the most fear is in the market, when everyone's panicking, when the VIX is pretty elevated, that's typically when you see the stock market bottom and when it's the best buying opportunity. When the market was crashing in April, everyone was talking about selling their stocks, the market's gonna keep on going lower, we gave back all the gains from the last 2 years. When all the news started coming out, all those articles started coming out, the volume started spiking on the Nasdaq and SPY. That eventually marked the bottom of the market, and now here we are sitting back at all-time highs. You know what Warren Buffett says, you have to be greedy when others are fearful, and be fearful when others are greedy. So hopefully you guys took advantage of that dip, and now we're back at all-time highs, feeling really good. My portfolio personally has gone from about $180,000 in the last 2 months back up to $250,000, so about a $70,000 move back to the upside of my portfolio. So overall, happy with the results, happy with what I'm seeing in my portfolio. I didn't panic, I just kept on following my plan. And on the next point here, just have a plan and stick to your strategy. And like I talked about briefly there, you have to have a plan or some kind of system to follow when the market starts going off the rails and starts dropping, or things aren't going like you planned. Now if you're a long-term investor like myself, these dips in the market don't really impact my strategy or system too much. I just dollar cost average in the first of every month, and I just let the market does what I have to do, because I have a long-term 10, 15, 20 year horizon, and these short-term fluctuations don't really impact my thought process. Now if you guys are a short-term investor like 1 to 2 years, these short-term moves in the market may greatly impact you and your future prospects of like buying a home or building wealth. But for me, I'm a long-term investor, so I just follow my system and I don't stray far from it. Now I may invest different amounts in the market, like in April and May I was investing a bit more money in the market than that was in months prior, because you were dropping down so low. But I'm always going to do my same thing, which is dollar cost average in the first every month and let the market does what I have to do. I don't really look at my portfolio too often, and when the market does drop rapidly and losing lots of money, I just delete the app and come back another time and hopefully check it's back in the green at some point. I don't overthink my system, I don't overthink my strategy. I just buy into good companies like I've talked about, Nvidia, Microsoft, etc. I buy into these names, month over month, year over year, and it's yielded me a great result, since 2020 when I started building this portfolio and started making videos. And the biggest thing I see with lots of people is they get too emotional and they're too attached to their money. Now I understand where that comes from, because like I talked about in past videos myself, I got greatly attached to my portfolio. It was kind of like my entire worth, everything I was striving for, building this portfolio. But now since I have other things to worry about, doing different things, moving to a new city, getting out of my comfort zone, my portfolio isn't the only thing that defines me. So if you guys are still emotionally attached to your money and everything that comes along with your portfolio, now you may make some bad emotional decisions if you guys are overly invested, you over leveraged, and you have too much money in the stock market. But like I talked about in prior videos, I balanced out my portfolio where it's not so greatly tied to my net worth. So if the market goes down, it doesn't greatly impact me. I have no debt hanging over my head, so I don't have to worry about paying back any debt collectors. And then on top of that, I'm sitting here, I have a pretty solid job. I make decent money from the market trading and through option drops. So I have a solid, reliable source of income. So if the market does drop, there's no panic about me having to sell my stocks in the long term because I have long-term horizons, and everything short-term like debt, loans, etc. doesn't impact me because I have all my debt paid off, and really the only thing I have to worry about is paying rent, which is not too much and fits into my budget relatively, easily. So be sure to focus on your system, your strategy, mind dollar cost averaging, and don't get overly emotional or too attached to your money, because then once you're attached to your money, that's when you start making bad decisions and start over leveraging and start selling your stocks at lows at bad times because you're fearful, you're over leveraged, and you didn't have a plan when the market crashed in April like it did and sold all of your stocks for a loss, and now we're sitting back at all-time highs, so you missed out. And my third and final piece of advice here, if we go through another market crash or big pullback like we saw in April and May, is have some kind of list or stocks you're looking to buy if we do pull back. Now, like I said, for me personally, my strategy is just to dollar cost average in the first every month. I don't really look at stock prices in terms of long-term investment because I have 20-year time prospects. So the prices right now are kind of, they don't really impact my thought process at all, because if I buy Nvidia at 140 right now, and my long-term time horizon is about like $200, $250, $300, does getting a $2 to $4 difference on the stock really impact my long-term profits in the future? Probably not. So that's why I don't really let the stock price impact me. I just dollar cost average in the first every month and don't really look at it from there. If we ever go through something like I saw in April and the market drops rapidly and pretty aggressively, you should have a list of stocks you're interested in buying for the long term and don't really care where they're sitting right now, because you have a long-term time horizon for them, and the short-term prices and the fluctuations won't impact you too much. So for me, my big names I bought last few months were Microsoft, obviously back at all-time highs like I talked about. I've been buying Apple, but that name's not really moving too much. Tesla's a big one, Google, Amazon. I always have my list of stocks I'm interested in dollar cost averaging a bit more aggressively into if we see a drastic pullback, but overall it doesn't really impact my plan, my strategy. I'm going to do the same thing regardless, keep buying the same stocks. But if the market drops aggressively like they saw in April, yes, I'll put a bit more money in the market, but again, I'm not going to over leverage myself. I'm not going to overextend myself and put too much money in where I'm feeling stressed out about money and things are feeling tight. I'm going to have a certain list of names I'm looking to buy, and when they reach those price points, put a bit more money in the market and let them play out, because I have a long time horizon on these names and I don't plan on selling them at any time in the future. One thing people always try to do is time the market, but as we all know, time in the market beats timing the market, especially with ETFs like VU and BTI. So there's never a bad time to buy in the market, regardless if we're all-time highs or not. Like I talked about in the video, if SPY's sitting at $600 right now and you think a long-term SPY will be $800, $700, does it really matter if you're buying SPY at $600 if you guys have about 30% return to the upside? Probably not. So time the market beats timing the market. Try not to sit there and let your emotions play too much. Again, just have a system. Mine is dollar cost averaging in the first every month. I buy whatever price the stock market is at, and I just live with it. I'm not going to sit there and try to get a dollar, better dollar on my cost basis. Doesn't really impact me too much because a dollar is not going to matter too much in 10, 15 years from now. So try not to time the market too much. Just set some alerts, be aware of where the market's sitting, and if the market is dropping rapidly, you'll maybe buy a bit more aggressively, but again, don't overextend yourself, don't get over leveraged, and be careful with your money. And know that investing is risky. If you put money in the market you can't lose, like you're saving for a house or tuition or stuff like that, it's probably a pretty bad, because the market's been relatively volatile. So that's why I only put money in the market I can afford to lose. If I lose it, is what it is. I'll rebuild myself back up to where I'm at right now. But I'm not ever going to overextend myself and get over leveraged in the stock market like I was in 2022 ever again. So the biggest takeaway from this video should be is you don't have to time the bomb. You don't have to be an expert. You don't have to be some kind of data scientist in order to buy stocks at low prices and ride them back to the upside. It sounds pretty easy in hindsight to buy low and sell high, but if you guys just have a set plan, dollar cost averaging in at some point every month, whether it be every week, every day, every month, like I do the first of the month, as long as you have some kind of system and strategy that allows you to buy in the market at consistent points in time, that's the best thing you can do. And that's one of the biggest wealth builders we have. You guys are part of the United States and the stock market in general. So hopefully you guys found this video beneficial. You took advantage of the market pullback we saw in April, and now we're on to bigger and better things. So be sure to drop a like, comment, subscribe, and stay tuned for the next video. Peace.